regardless of whether that 5% going to the liquidity goes to their market making account or to the DEX, either way, that's not money for Safemoon, right? Because we were just talking about how Safemoon could have made profit. Even no matter what the tokenomics were, there was no wiggle room about Safemoon somehow making a profit from this deal, from what all these people who have listed on Bitmart are telling us. They're actually telling us that Bitmart's one of the worst when it comes to, you're not going to make any money. You're going to pay money to be listed on Bitmart. And by the way, I have an email from Bitmart themselves telling me this, where I said, hey, did basically you pay all this money to Safemoon? And they responded to me and they said, no, Bitmart, or they paid us to list. Now, they didn't talk about the whole, all the tokenomics and stuff, but they were very clear, and they never said that they paid Safemoon a dime. And in the
we all know there was a listing fee like that. That's very public knowledge. I think
right, but that just further corroborates everything everyone else has been telling us. Now we have two people who have Bitmart deals who are both telling us the same thing, which is that you're not making money when you get listed on Bitmart.
And it shows an avenue for Karoni's innocence because, again, the question is, where did this money come from?
Correct.
And you're saying that, it may have come from the market making that's going on Bitmart. But if everybody here is telling you there is no money to be made on Bitmart, now we're left with the question, where did the money come from? And now the Bitmart excuse is not valid. Went back to you whatsoever. None of the market making, none of the exchange fees, none of the spreads, nothing. You guys saw no profit from that whatsoever. You were paying to list, right?
Well, and to answer the original question that was that Brain asked is no, we didn't see any revenue or anything come directly from Bitmart. It was just the pleasure of being listed on their platform.
I was wondering if Kark, if you could speak to that based on your knowledge and your perspective, because Kark's actually a really smart guy. That based on what you know, is it ridiculous to suggest that Safemoon or John could have made 19 million or whatever that number is of Tether based off of market making with Bitmart?
Well, again, if there's a market making deal that that led to some sort of money being made on Safemoon's behalf, there is something that John did tell me once, where he said something to the effect of that when he made deals with exchanges, that I don't want to use the wrong verbiage, but something to the effect of that he basically raked them over the coals. He got a really good deal out of it in one way or another, and I'm not exactly sure what that means. So, but no, I don't know. I don't know where the funds go and how the funds are managed, or if there was sort of some weird market making deal that there's some percentage that was moved around or something to that effect. If it is some sort of special deal, that might be able to explain it. But I just don't know. Because that's the problem with these centralized exchanges is they're black boxes. You don't know exactly. They treat different tokens differently. They have different, what they do in the exchange is not transparent like it is on the blockchain. And so, yeah, you can have different deals and have absolutely no knowledge or indications to what's going on. And that's one of the reasons why I just don't like it. And I think it would be valuable on Safemoon's side to be able to map out and to just as a form of transparency. I think it would be valuable and good, I think, for everyone, for them to explain exactly how things do work with Bitmart and how that money does move around and what happens with the 5% that is designated for auto liquidity, maybe even demonstrate some of the transactions for that.
They'll never
that would be
do
absolutely
that,
wonderful.
They'll never do that because they would have done it already. I mean, none of that would have violated anything with the lawsuit, but they'll never do that. Hey, we have somebody named Docstradamus, who looks like they're a CEO of a coin. Maybe they can speak more to Bitmart.
Yeah, so we actually have a reflections token on Bitmart. Thanks for letting me speak. So you do get paid out in USDT from a reflection token, but there's a very possible way that Safemoon actually did make this money. So you have a market maker for multiple reasons, and they all have a different account associated with it. So each time I go through something, imagine there's a different account for it. So one is the order book. That's your 25 and 25. So you've got your 25,000 in USD, and then you got your 25,000 in the token. And the order book is made to maintain itself. So you never want to sell anything out of your order book. It just goes up and down and keeps the price stable. You can validate this by going onto like a Bitmart and buying 40,000 in BUSD at a time. It'll either skyrocket or tank the price very momentarily. So account number two with your market maker is usually volume. And market makers don't get paid for volume accounts either. It's just your standard monthly fee. And that's to meet minimum volume requirements or maybe exceed volume in some capacity. But then there are 3 and 4 accounts, and those are called cash out accounts. So because you want your assets to stay stable in account 1 and 2, if you as a company want to taper off of assets in a way that doesn't harm anyone and doesn't negatively impact anyone, you send it to account number 3 and 4, which are cash out accounts. Now, the market maker does take profits from this along with you. So because exchanges don't operate on a liquidity pool, it's the only prices that you can control. I can't control my price in PancakeSwap. I can control it on an exchange. So the exchange, more or less, to meet the spread requirements, has to maintain the same price as it is on PancakeSwap. So if I have these accounts set up and I have a whole bunch of buys going out on Bitmart, my company is selling an equivalent on top of it. So that's probably where the $15 million came from, because there's no other way to manage it.
Wait, sorry, I'm confused. Can you kind of speak to this slightly more about how this cash out works? Because I think a lot of us aren't familiar with why or how you could cash out money. Because you have to understand, all this money was meant to be for investors, right? And obviously, we all know you can't make money from thin air. So if no money is being generated through the volume for the coin, how is money being made out of thin air, sort of into the company's pocket?
So you've got organic buys on Bitmart, right? And again, so if they listed with multiple exchanges, you have to go off a singular price point that your market maker is going to want to match. In our case, on BSC, or if you're on Uniswap, right, you want to go off of the DEX price. Now, we don't control the entire liquidity pool. I guess we technically do, but you should never control the entire liquidity pool on a DEX, right? So those buys are purely organic, right? If someone buys, it raises the price. If someone sells, it lowers the price. It's that easy. Every one of the exchanges has to match the price. So your order book and your volume accounts are made to keep that price stable, to make sure that big buys on Bitmart don't cause this massive amount of arbitrage and someone can go and turn and rob your liquidity pool, or vice versa, right? You want to make sure everything maintains a stable price, and you can control the price on exchanges. So because you don't want your buy and sell accounts, your order book maintenance accounts, to actually impact, you don't want to sell or buy actual tokens from it. You just want it maintaining the spread. The cash out accounts, when someone does have an organic buy on Bitmart, it would sell the equivalent of that buy. So it's actually doing it in a way that doesn't negatively impact holders. Otherwise, the money just stays in Bitmart.
I'm sorry. So when there's a buy, you sell, but when there's a sell, you have to buy, right? So I don't understand where all this.
That's what the order book does. So think of this cash out account being just when somebody buys, it's an equivalent taper off. It's just automatic sell orders coming from this. So
yeah, but it doesn't make sense. No, I understand what you're saying, but it doesn't make sense to how then the order book wouldn't be depleted, because when you're buying, when there's a buy, you cash out. When there's a sell, you buy from the order book. So wouldn't you be depleting your reserves from your order book if you're just buying, and then when there's a buy, you sell? Like, so so money's flowing out, but where's the money flowing back into your order book, I guess?
So it doesn't really flow back into the order book because it's separate. It's similar to like if someone were just to go and buy on Bitmart or sell on Bitmart outside who doesn't own the token. There's no order book associated with it. The only order book is to maintain that spread. So that's your first account. And why Papa is probably saying it was going to multiple accounts and you think one is John's personal account, and it very well may have been. It's because they set up these other accounts to taper off of the mini buys that they were getting at the time. Because as that price goes up, if you don't have those accounts, as a project, you're not making anything at all. So basically, and we learned this too late. And I think the big problem with exchanges is nobody gives you a guidebook up front of like what you can and can't do. But as your price goes up on an exchange, because it's going up on PancakeSwap, you still don't have a reasonable way to sell as a project owner unless you have one of these other accounts go up. So the money, if you don't have a cash out account, stays in Bitmart, and it will continue to stay in Bitmart. The money, if you do have a cash out account, does actually come back to the company, come back to the organization and the enterprise. So
forgive me for speaking up. I just don't understand. I'm just unfamiliar with this because, and maybe somebody can explain it better. I just kind of always operate sort of on a pretty simplistic model of like, if money's marked for something and then all of a sudden you're generating profit from that, right? Money's marked for a liquidity pool. All of a sudden the liquidity pool is supposedly staying the same, but money is being generated. And there's no explanation how other than, well, when they buy, we sell, and then we take the money.
So Exchanger is operating on their own. And that's why like institutional adoption of Coinbase never happened, because they have to freeze assets when people withdraw, because that's the centralized liquidity for the exchange, the entirety of the exchange. So what happens, and sometimes these exchanges make even more money or have a larger liquidity pool, is when people are buying this new token on an exchange, all that is going to the centralized liquidity pool. So some people, again, we didn't do this because we didn't know, quite frankly, but some people will set up those cash out accounts, and instead of all that money going to the exchange's central liquidity pool, they end up going to the projects. And that does nothing to negatively impact the price, does nothing to negatively impact the liquidity pool of the
Wouldn't
project
it thin
itself.
out the liquidity on the centralized exchange, though?
It
Yeah.
would, but on this scale, it wouldn't impact anything. Like,
Well, what
if
we
this
had,
was like,
and what I was curious about was Safemoon kept sending like billions and billions of tokens to this centralized exchange. And my question was, well, if there's a balance of tokens, they wouldn't need to do that, right? Like eventually they would just have enough liquidity and they'd be fine. But if what you're telling us is that they were draining it out sort of to decide to make a profit while basically constantly repurposing these funds, it's pretty easy to see why they were so excited to send funds to Bitmart, right? Is because they basically,
My bad.
Sorry, Coffee, continue. You got muted by
no,
mistake.
it's basically they found out a way to just turn these funds into like basically go from this centralized exchange and just throw it into their own pockets. I mean, I don't know if this is standard practice or whatever, but this is certainly not the deal that we were all told about. And this wasn't from market making. You're just basically
It sounds
telling
like
us
money
that
laundering
they
to
had
me.
access to the funds, so they just put it in their own pocket. But I don't understand how this isn't some kind of you keep saying it's not impacting the price, but to me, if it's impacting the liquidity, then it is impacting price.
Liquidity and price are always interchangeable, whether it's centralized or decentralized.
Yeah, but what's changing, Kark, is who's controlling that liquidity. From the scenario Dr. Stradamus was talking about, it sounds like it goes from the liquidity pool to being like a team-controlled wallet by basically laundering it through the exchanges.
Correct. That's what I understand as well.
I wouldn't call it laundering. That I wouldn't go that extreme with it. I think it comes off negative because everybody here is so unfamiliar with it. So like Safemoon wouldn't be making any money unless they sold tokens, right? We could all agree on that. That's how their economic model was. They issued themselves tokens. You're not going to make money unless you sell it, right?
Correct.
So they've got two options to sell it. They could sell it from PancakeSwap, which just destroys the liquidity pool because they had so much money in these tokens. It would just destroy the liquidity pool. It would ruin the entire project. And I'm not saying that to an extent someone did within the
But
team.
why?
But if you put it on Bitmart and keep it on these exchanges, you can either let Bitmart keep all of that money, or you as a project can actually make money on your token and not negatively impact your own investors and your own holders.
I'm still confused on how this doesn't negatively impact. That's just something that doesn't compute with me.
Yeah, this sounds like financial alchemy, dude. The money has to be coming from somewhere.
Well, I want to say this as well. I mean, what he's saying is, look, Safemoon wanted to sell. They can either sell on a DEX or on a CEX. So they were just doing it on the CEX to try to hide it and or not negatively impact price. The problem that most of these people on this call have with that conclusion is that Safemoon was saying very publicly that they were not going to do this. The whole point of their liquidity pool, and I don't know how familiar you are with the story, is that Safemoon was locking these funds up for investors, right? There was never any mention of, hey guys, we might dip into this project and actually take some of the money for ourselves. Instead, there was a 4-year lockup on a pool of funds for the team that they were going to unlock after 4 years, and that was going to be their big payday, right? And so they said, we're basically working until then on this project. Now, whether you want to call that naive or not.
No one's debating that.
Yeah, I won't debate that either. I honestly don't know enough about it to debate either direction on that, but I will clear up one misconception. There is no company-owned liquidity pool on exchanges. It's just an order book, and it's an order book that refreshes every couple of minutes if you use something automated, and it's just buys and sells to maintain the spread. So that one person, if you don't have that order book, one person could go on and buy $10 worth of your token, and it would skyrocket. And it happens usually like right when a token lists on an exchange. And people
Right,
exploit
but
that.
that's usually when a token doesn't have the volume that you see, like something like Safemoon, especially in its heyday. You'd have people going through and creating their own. They were buying massive amounts and selling massive amounts, and I guess the whole concept of an order book model is that it's organic, right? Especially with the volume that Safemoon had, that you wouldn't necessarily need market making for this to happen. And honestly, arbitrage is a normal, natural process, right? I mean, if and people are incentivized to list to if they're actively trading this or botting it, right? That they would have buy order set and they would have sell order set, and with the volume of something of Safemoon, that you wouldn't necessarily need market making as near as much as you would with a token with very very little volume and interest, right?
I would say the exact opposite, actually. You have to have a market maker that has a ton of buy and sell orders on an automatic basis to make sure that that market making account stays stable and you stay within a spread requirement. So the spread requirement for exchanges is generally 2 to 5%. Anything over that, and you get a little nasty gram from them. And that 2 to 5% is based off of your average across all exchanges and dexes. So again, you have to pin it to the one that you can't control. In their situation, it's pancake swap, because that's where buy and sell orders actually directly impact the price. So you have to have a bigger order book if you have more volume, regardless of if you want to do any type of cash out activity or not. Your order book has to be pretty tremendous if you're getting $150 million a day in volume on a singular exchange, because there's no liquidity pool to back it. It's all one liquidity pool that covers all of these tokens.
Yusuf, can you can you speak to a little bit of this?
Yeah, so basically I wanted to clarify about the cash out. So basically market makers provide this cash out option. It's quite new, especially on Bitmart. A lot of Bitmart market makers are offering this. And essentially in their words, this is, if you don't understand, this is how they explain it. This is, I'm reading a quoting from my market maker when they're explaining it to me. They said, the cash out bot calculates the best bid-ask spread frequency algorithm and creates it in the order book without any impact on the price. Then the bot waits until someone buys it. If any buyer sets an ask lower than our bid-ask spread, then the bot recalculates and resets the ask again. So essentially, some people who place orders above the market price, basically the bot recalculates it to meet their market price, and then basically they sell it for a profit. That's basically how it works. But there is also a negative side. So he is correct in saying it doesn't affect the price. But the negative side about it is if there's high volume, then they'll be making a lot of revenue, correct? But the market makers actually get 10% of this. It isn't a free thing. Market makers take 10% of the cash out service. So these market makers could be offloading tokens also.
They very well could. And not all market makers are going to take 10% from any type of cash out activities. There are some that will actually loan money to your company and take a long-term position within your token as well. So it's not all a bad thing, and exchanges aren't all a bad thing or a negative thing to gain exposure and traction either. And I think the point that I was trying to make is that $15 million could be pretty easily accounted for. And I know the market maker that you're using because they're Bitmarts, that one you just described, and they do have that function of cash out. So if somebody says, hey, Papa, send your tokens here if you want me to turn them into cash, and he did that and got cash back out, or they had a collective one and he did that and they all got cash back out, that's the most reasonable and simple explanation for it. That's not me coming to anybody's defense. It's just kind of the logics of Bitmart and what I know their market maker to do, and knowing that they were one of the first exchanges of Safemoon.
Yeah, Bitmart, I've listed on multiple exchanges, and Bitmart was by far the worst exchange profit-wise, right? Even for coin volume. Because there's other exchanges like, let's say, P2B, right? They make an effort for marketing, actually pushing out the project. Bitmart are the worst people I've ever interacted with. Bitmart, they're actual predators, right? They're like, if you don't meet their volume, they say, oh yeah, we're concealing your pair from CoinGecko and CoinMarketCap. No one will be able to see your pair. Pay the market makers the 10K per month, and then randomly they hike up the requirements. So they're like, so before I need 20K in liquidity, then they needed 50K, and then I'm like, no, I've signed a contract with you explicitly stating that I need 20K in liquidity in the back end, basically because you need something called bid-ask spread. So to meet they changed the bid-ask spread to make it more requirement intensive, so they can get on those higher spots like next to Binance and stuff. So then I told them, no, I'm not obligated to basically change my provide more liquidity. They said, okay, you're concealed. So after fighting with Bitmart for 2 months, I actually had to send them like a legal letter basically saying, oh, you signed this in the contract, blah blah blah. And then they sent like a policy, and then basically I said, okay, if you want to go based on the policy, and because there's something in the contract that's saying you have to meet all the policy requirements, then I can file for discrimination, because basically every coin exchange follows different requirements. They say there's one policy, basically every coin has to follow 20K bid-ask spread, but then there's some coins like XCAD, right? If everyone knows XCAD, they literally bypass all the requirements. They don't even need any volume whatsoever, and they're still unconcealed. So Bitmart basically treats coins extremely crappy, right? But if you're talking basically going back to the question, if the coin made profit, I can guarantee you, Safemoon paid more than they made from Bitmart, 100%.
I still am like really deeply not understanding how this doesn't just this isn't sort of like a what do you call it? This isn't sort of like a roundabout way of selling tokens without looking like you're selling tokens, right? Without a impact of price, but a thinning of liquidity.
I mean, and I just came into this situation. I would say that that's either just a misunderstanding from my explanation or an internal bias or an innate bias because of other things that they've done. Because this is the most the moral and ethical way to taper off of tokens if you need it for money. Just to be completely transparent. Otherwise, they would have to sell in waves on PancakeSwap, and it would be bad for everybody because they held so much money. They blew up quicker than anything we've ever seen. So they held so much money that this was the only logical option for them to say, hey, we got to turn this into operating capital. This is how we do it. Now, what they did with it is another story entirely.
Yeah, but Doc's the point that he's trying to make is that, like, even if this order of operations that you and Yusuf were talking about, if this is how it works, there is no way it can't impact the price. The money has to be coming from somewhere. The US dollars, the USDT, the BUSD, whatever. So, like, in this roundabout fashion of having some founding organization cashing out, it's basically front running the market. It's like, oh, if the market has enough volume to support it, we can just front run it before the bids like hit the order books, and we can just take our chips off the table and then allow like just drain the liquidity in a roundabout way.
Right. That's a way to look at it for sure. So like liquidity pools on exchanges, like I said, they're centralized. So they want to cover, if they had a mass exit, they want to cover that exit and pretty much nothing else, right? That's what they're trying to do and how they bring in more liquidity. So that liquidity stays on the exchange. If you don't do it, generally it won't negatively impact anybody unless there's a mass exodus out of the exchange. Then some people might not get their money out of it. But that's if like the exchange tanks or there's a huge market fluctuation and everybody pulls out. I think this happened with somebody recently. That's why I'm pausing, because I'm trying to remember who it was, and they had to get bailed out by someone else because these exchanges don't actually have the right amounts of liquidity to operate, and they wouldn't be allowed to if they weren't crypto exchanges. That's a big hit on Coinbase still.
If I put a massive sell order of tokens on an order book exchange and created this massive sell wall, right? And people were like struggling to like try to break the sell wall, right? You could argue that it doesn't impact the price, but you're selling a ton of tokens and you are impacting what the price could be. So like if I have a ton of tokens in existence and I create a massive sell wall, like absolutely sure, like you could argue, oh, this doesn't impact the price, but it does impact what the future price could be. And so that's just a distinction that I want to make, is that, you know, when you say does it impact the price, I don't know, that just doesn't set well with me, just because, again, from economics of scale, like what Brain says, that money has to come from somewhere. So I'm just trying to reason through this. Like you may say it doesn't affect the price, at least from like an operation standpoint, it doesn't tank the price, but you need to look at it from the perspective of what the price could have been if lots and lots and lots of tokens aren't liquidated. And this isn't talking about Safemoon. I'm just talking in general, right? On how centralized exchanges should or shouldn't operate, or how liquidity should or shouldn't operate. That I don't think it's moral. I don't think it would be ethical for a project to create a massive sell wall and not allow the price to go above a certain point if there is a ton of market interest, where the price would be 20 or 30% higher if they wouldn't have done that.
Okay, but here's the
Guys, sorry to mute everyone, but we've got Peter from Everrise who's had signed up for a while, and he's probably got some good info. So
Hey,
go ahead, Peter.
hey, sorry, just getting my mute situation sorted. Thanks for having me up. I definitely agree with Kark's point that money comes from somewhere, and if you throw your lot in with market making on centralized exchanges, you start to act more like the casino than a particular player. So any price fluctuations will not be nearly as visible, but they are meaningful. If a poker game goes on for eternity, then only one person wins, and that's the house. What's kind of getting lost here is the idea that, like, isn't this supposed to be a decentralized protocol, and therefore isn't the very idea of selling tokens for any kind of benefit totally anathema? Like, in my view, something with a community as large as Safemoon would be better off just dismissing everybody related to any kind of development at all and exist as a pair with BNB that might do well over time. The community has achieved minimally viable status, and there is no reason to yank millions and millions of dollars outside of that community's hand. If that's the kind of investment you want, go look at startups and go look at the stock market, because they have more experienced teams and they don't talk in doublespeak all the time. So, there's no reason for a DeFi protocol to be yanking millions and millions of dollars out of their holders' hands through whatever medium, whether it's by assisting an exchange in market making or simply yanking it out of the liquidity pool. So, like, I'm sorry this is not terribly informative. My only question is, what in the hell is going on here?
Well, I wanted to jump on that real quick because I think it's an important point for what I've been trying to communicate, and I think you probably put it better than I could, which is simply that if Safemoon had come to their followers and said, "Hey guys, we're going to be selling off millions of tokens. We're going to try to do it without affecting price, but we're basically going to be raising tons of operating capital in order to create all these crazy new endeavors or whatever," that would be one thing. The problem is they didn't say that. They didn't pitch that. And well after they were the most famous and high priced as they ever were, they changed their entire operation, right? What they pitched to investors was very different than, hey, we're going to be secretly selling off, into this market making cash out wallet. Whether or not you want to say, oh, it doesn't affect price this way or that way, this is literally not the kind of thesis of the company. So a lot of people have been saying fraud is because the thesis of the company was one thing. They come and take a ton of operating capital, and then John Caroni pockets a lot of it. No matter how you get there, if people didn't invest based on that idea of this is what we're doing, I think that's fraud. If you say we're locking these funds up and they're not locked up, and then you go spend them somewhere or you go make money somewhere, no matter how you want to justify it, oh, it's operating capital, it doesn't matter. That isn't what you brought people on to invest for. And also, so I hope that kind of it makes sense of why I think a lot of us are we're not trying to come in with a negative bias on what this cash out operation is. I think we're coming in just with an expectation of what they kind of set the expectations at, if that makes sense.
It does make sense.
I think that's,
and it's not just that. Sorry, I'm just going to finish this point. It's not just the thesis of the company that they outlined. It's the thesis of DeFi that everybody has taken and run with. That this is all about decentralized control over your own assets and not having to rely on the efforts of one group of folks. So it's about a world where we don't have to plow millions and millions of dollars into half-baked ideas. It's about a place where we can pool together assets of value like BNB, Ethereum, Phantom, Avalanche, Polygon, whatever, and then do the community work of building that group so we can talk about the reasons decentralization is important to us, not about advancing all these vague ideas about evolutionizing the world and changing everything with talents that are still unspoken. So the entire DeFi space has kind of hijacked this Satoshi-style language while creating entities that are violently centralized and exist to take money out of their holders' hands.
Yeah, and I'm not going to refute any of that. Actually, I think all of your points are pretty accurate as a whole. And what I'm trying to do here is shine light on something, not defend it. I'll say that in the interest of balance, for every up, there's going to be a down here. So the same thing is true if someone sells a massive amount on a centralized exchange. That order book price is going to be maintained based off of your pancake swap value. If anything, it's just taking money out of the exchange itself and putting it into control of people, or maybe some good company, maybe some bad company.
That's exactly what it is.
Yeah, and that's all it is. And it's not robbing Peter to pay Paul. There is no, because that price is going to be maintained regardless. It's just where the money ends up going, right? If somebody buys $50,000 of my token, it doesn't matter if I sell an equivalent 50 or not. It's still going to remain at the same price on that centralized exchange because we have to peg it to the uncontrollable.
Well,
but centralized,
that's not quite correct, because you're taking away other legitimate buy orders. No, if there was a
Go ahead,
person
Crypto Control.
if there was a person who legitimately wanted to buy tokens, you've now taken away that $1,000 from them. So you're destroying the demand from legitimate buyers to take money away from them, which will eventually impact the price because other people will then arbitrage the price difference between PancakeSwap and the SEX.
Yeah, I think that's an amazing point. And I just actually also wanted to ask you, Docs, is that you said earlier that if you don't take the profit, then Bitmart would get the profit. And if that was true, why would Bitmart be willing to give away that $15 million?
So it's not Bitmart's profit. Like they have to maintain liquidity so that if a bunch of people exit their platform, right, they have liquidity to allow people to continue to exit on the platform. That's what it is. It's actually like can be truly described as exit liquidity. People who take their money and move it to another exchange, they actually have to move the cash. Until you move something off of an exchange, it's all the same liquidity pool. No matter what token you have, no matter if it's USDT, it goes back to not your keys, not your tokens.